Governmental accounting maintains tight control over resources, while also compartmentalizing activities into different funds in order to clarify how resources are being directed at various programs. Refers to the process of recording and the management of all financial transactions incurred by the government, which includes its income and expenditures. Various governmental accounting systems are used by various public sector entities. Government accounting is the process of recording, analyzing, classifying, summarizing, communicating, and interpreting financial information about government in aggregate and in detail reflecting transactions and other economic events involving the receipt, spending, transfer, usability, and disposition of assets and liabilities. The purposes of government accounting are to carry out the financial business of government in a timely, efficient, and reliable manner. Example is to make payments, settle liabilities, collect sums due, buy and sell assets, etc., subject to necessary financial controls. To keep systematic, easily accessible accounting and documentary records as evidence of past transactions and current financial status so that detailed transactions can be identified and traced and all aggregates can be conveniently broken down into their constituent parts. To provide periodic financial statements containing appropriately classified financial information as a basis for A. Stewardship and accountability, and B. Decision-making. To maintain financial records suitable for budgetary control, internal control, and the needs of auditors. To provide means for effective management of government assets, liabilities, expenditures, and revenues. Governmental funds are associated with funding received from legislative sources, such as tax revenue or appropriations. Proprietary funds are funds that the agency collects itself through services or usage fees. Example of fiduciary funds would be pensions and retirement investments. Ang government accounting ay ang proseso ng pagre-record. Nakapaloob dito ang impormasyong pinansyal ng gobyerno. Halimbawa na nga nito ay ang tax, mga transaksyon at mga pinagkakagastos ang mangyari sa loob ng gobyerno ay dito nakatala. Isa itong mahalagang parte ng pagpapatakbo ng isang gobyerno, sapagkat dito makikita kung tama ba ang naitatalang pagkuhang pinansyal o ang tinatawag na financial acquisition ng bawat miyembro nito.
Fiduciary accounting. Fiduciary accounting, sometimes called a court accounting, is a comprehensive report of the activity within a trust, estate, guardianship, or conservatorship during a specific period. It shows all the receipts and disbursement managed by the executor, trustee, guardian, or conservator, the fiduciary properly allocating all transactions between principal and income. These accounting are regulated by the government instrument and state law. Fiduciary accounting involves recording the transaction associated with a trust or estate entity, and issuing periodic reports on the status of the entity. This accounting is dealt with on a cash basis, where cash is recorded when received and disbursement and distribution are recorded when paid. Fiduciary accounting, from the word fiduciary, is someone who is like a curator. Ito yung naka-assign sa mga loans or debts, something like that. Yung sila ang pinagkakatiwalaan sa mga accounts ng kanilang mga clients in terms of money. Para lang advisor mo when you plan to make a business, 'di ba, in terms of making small or big business, you seek to ask for advice. It sounds like financial advisors, but a fiduciary is also the one who is responsible for another person business assets. Fiduciary accounting, ito yung trusted fiduciary ang mga magmamanage ng asset mo, but ikaw ang magmamayari. Kumbaga, sa kanila mo ipagkakatiwala yung mga asset mo. Example of fiduciary account, includes trust, estate account, escrow account, and accounts with a power of attorney.
Next is number 8, estate accounting. Estate accounting is accounting which pertains to the settling of an estate. When someone dies, his or her property is handled by someone appointed as an executor. The executor must keep accurate accounting records as the estate is wrapped up and distributed in keeping with the wishes of the will. An estate is a person's entire personal property, including all land and real estate, possessions, financial securities, cash, and other assets that the individual owns or has a controlling interest in. In addition, estate accounting includes preparing tax returns for the deceased and advising beneficiaries about their own taxes. Inheriting can come with the tax liabilities which people need to be prepared for so that they can file their taxes accurately. An estate accounting is a document that provides specific details about what property was in the estate at the time of the descendant's death, what additional property came into the estate since the descendant's death, how the estate funds were spent, what property remains in the estate at the time that the accounting is. When an estate is being distributed, accounting issues typically arise. Hiring an estate accounting attorney can help families navigate financial and legal issues that accompany the distribution of an estate. Estate accounting attorneys are able to execute the will in the way in which the owner of the estate intends. Securing an estate accounting lawyer can be a huge benefit, especially while starting the process of estate planning. Being prepared for the future will do a lot to help your loved ones. The estate principal is the property that was in the estate at the time of the descendant's death. This can include personal property such as assets in the descendant's checking and saving accounts, and real property such as house owned in the descendant's name. In general, property must be valued at the date of the descendant's death. In order to ascertain the values of certain property, such as real estate, the executor will need to obtain appraisals. For example, vacant land and residential lots, plus the houses, outbuildings, decks, tree sewers, and fixtures within the boundaries of the property are examples of real estate. Furniture, cars, paintings, jewelry, and boats are examples of personal property rather than real estate. And for us to better understand what estate accounting is, here is another explanation. Ang estate accounting ay ang dokumento na nagtatala ng mga properties ng may-ari bago ito mamatay, kung ano ang mga naidagdag na property mula nang ito ay namatay, kung ano ang mga ari-arian na nakatala sa libro ng accounting ng estate, at kung paano ito hahatiin.
11. Accounting system. Accounting system is a set of accounting processes with integrated procedures and controls. The intent of an accounting system is to record business transactions, summarize those transactions into an aggregated form, and create reports that can be used by decision makers to monitor, analyze, and improve operations. And this is the installation of accounting procedures for the accumulation of financial data and designing of accounting forms to be used in data gathering. Accounting system should have: Number 1. Reliability. The information produced should be reliable. It is an essential feature. If the data entered in this system is not authentic, then the outcomes are also not trustworthy. So, it will not be possible to do the proper estimation of the company's prospects if it is not reliable. Number 2. Easy to understand. It shouldn't involve complicated formulas and should be easy to operate. If it is complex, then the accountant who will be handling it may get confused and make errors. It should be straightforward to understand as to where precisely a transaction is hitting and what effect will the transaction have in the financial statements. Number 3. Comparability. Financial statements produced by one accounting system should be similar to those produced by other accounting systems, resulting in apple-to-apple comparison. Calculation methodologies should be as per industry standards so that the masses can understand financial statements.
Number 4. Latest software. This system should be capable of developing itself automatically with the ever-growing financial world. So the latest software which gets updated automatically should be used. Everything is going automated in today's world, so this system should be able to adapt to this. Number 5. Easy to use. Accounting systems should be easy to use. It shouldn't be that an employee needs to go through rigorous training to understand the system. Once it is easily understood by all, then only everyone can bring ideas for upgradation. The charts and statements should be easy to generate. Types of accounting system: single entry and double entry. Single entry. This is an informal way of maintaining a record for financial transactions. Here, separate accounts are not opened. Only expense and income as and when happening is recorded. So, it is not possible to prepare charts and other financial statements from the single entry system. Single entry is mostly maintained by small businesses as they don't have the expertise to follow the latest systems and not accepted by authorities for tax reporting. Double entry. Double entry is accurate and is used by all major organizations worldwide. Here, transactions are clubbed in separate accounts, and each transaction has two legs that affect different accounts. So, it is easy to find mistakes as every transaction has two legs. So, it may happen that the other leg is correct and the auditor gets a trigger from there. How does it work? Step 1. Whenever any transaction happens, such as sales, purchase, expense, or any kind of transaction, then that transaction is recorded through proper journals. So this is the first entry that you do in this system. Step 2. As all the accounting systems are computerized now, so whenever you post a journal, the respective entry in the correct accounts ledger is done. Software versus manual accounting system methods. Each accounting system type has different benefits and are best suited for different businesses. The two ways accounting systems are structured are software versus manual. Accounting software. Many businesses use accounting software or computerized accounting systems to process financial information. Different types of accounting software offer various features, and you can typically customize them with add-on options. Using accounting software has many benefits, including reduced time on manual accounting, reduced risk of data errors, real-time data, automated business and accounting processes. The right software combines the features you need for your business, which may include automated processes, cloud services, and integration with other productivity applications. Examples of accounting software options include FreshBooks, Intuit QuickBooks, GoDaddy Bookkeeping, Zoho Books, Xero. Examples of accounting system. Example number 1. Retail business. Retailers are engaged in buying and selling of goods, so their accounting system should be concentrated on the level of inventory and how much discount they are getting or giving. So the whole system should be based on different products and how much is payable or receivable. It should help them with ratios like gross profit margin, net profit margin, and other measures that they require in their operation. Example number 2. Contractor. The most crucial factor in construction is material cost, so this system should be more elaborated on different types of raw material inputs. The system should be able to throw different ratios.
Social accounting. Social accounting emphasizes the notion of corporate accountability. Crowder defines social accounting in this sense as an approach to reporting a firm's activities which stresses the needs for the identification of socially relevant behavior, the determination of those whom the company is accountable for its social performance, and the development of appropriate measures and reporting techniques. Social accounting measures the environmental and social impact of an organization. This approach goes beyond the normal formulation of financial statements. It also measures a firm's impact on stakeholders. Thus, social accounting can be used to determine the accountability of an organization. Ang social accounting ay ang approach ng business sa kanyang environment or nasasakupan. Hindi porket may business na, ay hindi na natin iisipin ang mga nakapaligid sa atin. For example, ang mga factory ay may sinusunod na panukala ng gobyerno, katulad na lamang ng tamang pagtatapon ng kanilang mga ginamit na kemikal, kasi kung hindi ito gagawin ng mga businesses, meron itong masamang epekto sa kalikasan at sa tao. In short, accountability ng company sa environment at sa society. Or in other words, lahat ng businesses at company ay mayroong pananagutan o dapat ay may pakialam sa kanyang kapaligiran. Three types of social accounting. The first one, environmental accounting. It gives information about the impact of business to our environment. For example, land, soil, air, and climate change can be affected. Second, sustainability accounting, also known as corporate social responsibility. It gives information about the social and economic sustainability. For example, the use of materials through the recycling process can help to become more sustainable. The third one was national accounting. It's analyzed the economic activity of a nation. For example, a government has to keep a record of their spending on each project to avoid misuse. Another example for social accounting. The paper manufacturing sector used waste paper to recycle the same to produce paper. The next one was manufacturing unit set up outside the local area because of the release of toxic air which is harmful to both living and non-living things. And the use of waste disposal technique to avoid water pollution.
Institutional accounting. Institutional accounting is responsible for the recording and safekeeping of Dartmouth's endowment, investment, and cash assets, the administration of the merchant credit card program, and the timely and accurate processing of payments for goods received and services rendered. Institutional account, an account that's opened by or for an institution like an insurance company or brokerage for the benefit of banks, mutual funds, or others. These accounts usually have lower costs and commissions and let money flow between institutions more easily. There's a lot of cash involved, but there's actually no minimum to open one. Like for example, ang pera na ginagamit ng mga namumuhunan sa institusyon ay hindi talaga pera na pagmamay-ari mismo ng institusyon. Ang mga namumuhunan sa institusyon ay karaniwang namumuhunan para sa ibang tao. Kung mayroon kang planong pensyon sa trabaho, isang mutual fund, o anumang uri ng insurance, kung gayon ay talagang nakikinabang ka mula sa kadulubhasaan ng mga namumuhunan sa institusyon. Another example is you can use self-explanation when studying a complex math problem and its solution in the textbook. In this context, at every step of the solution, you could ask yourself questions such as, why was this step taken? And then attempt to generate explanations. Pinapakita lang dito sa institutional accounting na siya ang responsible sa pagre-record at pagtatago ng mahahalagang bagay tulad na lang ng Dartmouth's endowment, investment, pati na rin ang cash assets ng isang company. At nakapaloob din dito sa institusyon na ito na sa account ay merong mababang bayad ang komisyon and let money flow between institutions nang mas madali nang hindi na nahihirapan ang may gustong mag-open account or humiram para sa pagbubukas ng business. Maraming involved na pera dito pero walang minimum para magbukas ng isa pa. Ang objective ng institutional accounting ay mag-record ng mga transactions na ang involved ay cash assets and investments. Ang institutional accounting ay organizations na nag-i-invest para makatulong sa mga businesses. Nag-o-offer din sila na mag-lend ng money for capital with a low percentage of commissions, gaya na lang ng mga lending companies, banks, and insurance companies. As an addition, dito ay walang kinikita ang mga namumuhunan, puro sila palabas dahil itinutulong ito sa iba't ibang foundation na itinatag. Ang mga ginagamit dito ay mula sa mga mayayamang negosyante sa buong Pilipinas o sa buong mundo.
Number 12, accounting research. Accounting research is a step in the process of reviewing and auditing a company's financial data in order to turn it into insights on complicated financial challenges that can help businesses make the best decisions. Accounting research is difficult to identify due to the fact that it has evolved over time. Early accounting research before the 1960s was mostly normative. Accounting research moved into positive research with the publication of Ball and Brown's seminal work. Despite its detractors, this move has resulted in a large boost in research output. Ang accounting research ay ginagawa para makapag-gather ng data o pag-check kung ang isang business ba ay nalulugi o kumikita. At ang accounting research ay makakatulong din para matukoy kung ano ang mga kinakaharap na problema ng kumpanya. Example of accounting research study. Number 1. The advances of online banking. Companies used to have this research so they will know if this applicable to all people or there is just a certain age range. 2. Can business work without accounting software? Companies have this research to know if their company will run smoothly without software or if they will be having a hard time to do their tasks. 10 steps in accounting research. 1. Establish the facts or identify the issues. To begin the research process, one needs to the why and what of the problem. Define the problem clearly and concisely. 2. Generate a list of keywords and concepts. Look at the clearly defined research problem, identify the keywords, examine the index of accounting handbooks and or textbooks for established accounting terminology. 3. Check out the AICPA website. Under the Research tab, members have access to white papers, standards, and surveys. 4. Locate an overview of the research problem. The best place to start are handbooks or with accounting standards. 5. Identify authoritative pronouncements. Accounting research relies on authoritative precedents disseminated by recognized standard-setting bodies such as FASB or IASB. 6. Locate articles regarding the research problem. Online databases such as ABI or Inform, Pactiva, and LexisNexis aggregate information from journals, magazines, trade journals, and newspapers. 7. Google it, but be aware of freely available information. Make sure information located in a Google search can be verified by information found in accounting standards or articles from the database such as ABI or Inform. 8. Search investment research reports. Investment research reports can be found in database such as ABI or Inform, Pactiva, Mergents, Morningstar Investment Research Center, and Value Line. Pay attention to the financial footnotes where significant accounting policies will be disclosed. 9. Examine financial statements. Annual as well, quarterly, financial filings are available from the Securities and Exchange Commission for free. Financial data can be found in databases such as Pactiva and Mergents. Pay attention to the financial footnotes where significant accounting policies will be disclosed. 10. Putting it all together. Identify the purpose, identify the audience, identify the context, identify all of the facts and ideas. Organize facts and ideas. Identify the best medium for the message.